Okay, let me see. Can you see the screen?
Yes, sir.
Okay, let me repeat then. So today we are going to understand the golden rule of account. Okay, it is very important to pass the journal entry in SAP. Until and unless you don't know the golden rules of account, it becomes very difficult for us to post any journal entry. So there are two approaches of passing the journal entry. One is known as a traditional approach, another is known as a modern approach. So in traditional approach, first is personal account. Okay, what is called personal account? In personal account, the receiver is always debit. Okay, so in the transactions, receiver, whoever is receiving something, he will be debited, and the giver will always be credit. Okay, what can be example? Let us say, so here person means either natural person, like say like Mr. Ram, Miss Geeta, Mr. John. Okay, these are the natural person. Either transaction or I mean giver or receiver can be either Mr. Ram, Miss Geeta, Mr. John, or it can be legal person also. Let's say company, let's say PayPal. Okay, PayPal or Apple, Apple Incorporation. Okay, Tata Consultancy Service. So these are known as a legal person. Okay, they are legal person. Another is something called representative, but I don't want to confuse you. So focus on these two kind of personal account. One is natural person, in which real person. Let's say you are I'm doing transaction with Samira, I'm doing transaction with Pallav, or you are doing transaction with me. Okay, either I'm receiver or I'm giver, or you are receiver or you are giver. Okay, natural person. Or you are doing transaction with Tata Consultancy Service, or you're doing transaction with Infosys, or you are doing transaction with DMart, you are doing transaction with Walmart. Okay, so even they are also person, but they are the legal person. Is it clear what is called personal account? So in personal account, the receiver will be debit and the giver will be credit. Is it clear, both of you?
Yes,
Clear?
sir.
Samira, are you understanding? Mira is there? Are you in mute? Let's see. You are in mute, Samira. You are speaking, but you are in mute, I think. Or no? Samira, can you rejoin, please? I think there may be some problem from your side. Please rejoin. You can disconnect and rejoin. Yeah. Please speak up. We can't hear you. Pallav, are you able to hear? Pallav,
No,
can you
sir.
hear Samira? So let me
No,
write.
sir.
Samira, please rejoin. Let her rejoin. Okay. Okay. So this is the about the personal account. So in personal account, the receiver is debit and the giver is credit. Okay, and these are the example. Then second, something called real account. Okay, in this, what comes in is debit, and what goes out is credit. Example, this basically deals with asset and liabilities. Okay, this basically deals with asset and liabilities. So let me write assets and liabilities. Okay. You know what are the example of assets and what are the example of liabilities. You know it, right? Asset, building, furnitures, all this asset. Bank loans, sundry creditors, debentures, bond, all these are liabilities. Correct, Pallam? Pallam? Pallab sir,
Yes.
are you there?
Yes, sir. Yes, sir.
Clear na? So in this, whatever comes, that will be debit. Whatever goes, that is credit.
Credit. Yes.
Right? Okay. Now third, the nominal account. Okay. In nominal account rule says that all the expenses and losses are debited. Okay. If you are incurring any expenses or you're bearing any loss, then that should be debit. And all the incomes are also known as a revenue, and all the gains. Okay. If you are getting any incomes, any revenues, any gains, then this is credited. So this rule you have to understand. Okay. These are the rule you have to understand. This is very, very important. The golden rules of account is very, very important. Here, example, all the expenses, losses, revenues, and gains. So again, I'm repeating, in personal account, the receiver is debit, the giver is credit. In real account, what comes in debit, what goes out credit. In nominal account, all the expenses and losses are debit. All the incomes, revenue, and gains are credit. Is it clear, Pallab?
Yes, sir.
Samira, is it clear? Today Samira has some problem, I think. Fine. Okay, now let us. So, same thing, same concept. They try to simplify in the modern approach. Okay, let us see modern approach of doing the journal entry. Journal entry. Model approach. In modern approach, what they are doing, telling asset, expenses. Okay, liabilities, capital. Liabilities is also capital only, and revenue. Okay. So listen very carefully. Whichever either you feel modern approach is easy for journal entry passing, or traditional approach is easy for journal entry passing. You remember whichever feel easy, you can use it. Okay. So modern approach says that it look at the impact, either it is increasing or decreasing in the transaction. So if asset is increasing, then it should be the debited. Okay, if you are doing the transaction and in that if asset is increasing, it should be debit. Let's say when you purchase the furniture, furniture is increasing in your company. Earlier you have one furniture, you purchase another furniture, so it will become now two furniture. So when you purchase furniture is increasing, it will become debit. Okay, that is what they are trying to tell. If asset is increasing, it should be debit. If asset is decreasing, it should be credit. So When you purchase the furniture and cash, your furniture increases, so furniture should be debit, but you are making the cash payment, so cash decreases, so cash should be credit. Okay, so that is what they are trying to put the journal entry in the modern approach with the help of increase and decrease. Similarly, expense also. If expense is increasing, it should be debit. If expense is decreasing, it should be credit. Okay. If you are paying the rent, it means that your expense has been increased. So it should be debited. But here for liabilities and revenue, it will be vice versa. If liability is decreasing, if liability decreasing, it should be debit. Okay. If liability decrease, be debit. If liability increase, it should be credit. So vice versa. Let's say when you take the loan, when you take the loan, your bank loan, okay, you taken the bank loan. So what happened? Bank loan is your liabilities. When you, let's say earlier you have taken 1 lakh rupees loan, if you take additional loan, your bank loan is increasing, means your liability is increasing, so you have to put bank loan is a credit. But when you make the repayment of your bank loan is decreasing. It means that your liabilities is decreasing. So you have to put bank loan is a debit. Okay, so that is how it works. So if liabilities is decreasing, it should be debit. If liabilities is increasing, it should be credit. Okay. Similarly, revenue. If your revenue is decreasing, it should be debit. If your revenue is increasing, it should be credit. Okay, so this rule you have to remember, decreasing or increasing. Very simple. Asset and expenses, okay, if they are increasing, it should be debited. If they are decreasing, it should be credited. Your liabilities and revenue, if they are decreasing, it should be debited, and they are increasing, it should be credited, vice versa. Is it clear, both of you?
Yes, sir.
Is it clear, right?
Yes, sir.
So this is the modern approach. So this is the modern approach is telling that you can use this way of also doing the journal entry posting. Okay, is it
Yes,
clear? Now what is
yes,
called
sir.
debit and what is called credit? Okay, debit and credit. Ideally, there is no any absolute meaning for the debit and credit. Okay, so in SAP, generally debit will be positive. It is not always the case. Okay, it is not always the case. I'll tell you when it is not always the case. And credit means it is negative. Okay, in SAP, debit is equal to positive, credit is equal to negative. If you understood this golden rule of account, now next step, let us see the accounting cycle. So in accounting cycle, first step is business transaction. Second step is preparing journal entries. Third step is preparing ledger. Fourth step is preparing trial balance. Fifth step is preparing P&L list, profit and loss account. Sixth number is preparing balance sheet. Okay, so this is known as a accounting cycle. Accounting cycle start from business transaction. Which are the transaction known as a business transaction? Any transaction which has the economic impact, okay, economic value impact, if it has. It is not necessarily it should be the monetary transaction, or it is not necessarily that money inflow and outflow should happen. Okay, but it should have the economic impact. Then that is known as a business transactions. Okay, so for any business transaction, the next step you have to pass the journal entry. Then you have to prepare the ledgers. Okay, then you have to prepare the trial balance. You have to prepare the trial balance. Then you have to prepare the profit and loss account. Then you have to prepare the balance sheet. Okay, so firstly there will be the business transaction. Then you have to prepare the journal entries. Journal entries are generally recorded for the one period. One period is equal to for 1 month. Okay, let's say I am doing the transaction is Pallab. Pallab is my supplier. So whatever transaction I did with the Pallab for entire month, I have to prepare the journal entry. Okay, so for every period generally we prepare the journal entry for each account. It may be Pallab account, it may be Samira account, it may be bank account, it may be sales account, it may be purchase account, it may be salary account. For every account I need to prepare the journal entry for the period. Okay, now ledger is also same. Ledger is also for each individual account I have to find out the summary balance. Okay, for all the transaction which I did with Samira or Pallav or sales account, purchase account, rent account, I need to know the overall balance. What is my net balance? Reason being, I may be purchasing from the Pallav, I may be sometime I may return also. If product is not good, I may return also. So net balance I have to find out with the help of ledger preparation. So whatever net balance is there in the ledger, that I have to carry forward. I have to put in the trial balance. Okay, so I'll put in the trial balance. Then with the help of trial balance, I have to prepare the profit and loss account, and I have to prepare the balance sheet. So from the trial balance, whichever are expense and revenue related transaction, that will go in the P&L. Whichever are liabilities and asset, that those will go in the balance sheet. Is it clear? Pallab, Samira, everyone is
Yes.
clear in this accounting
Yes.
cycle?
Yes, sir.
Okay, na?
Mm.
Now, so whenever in SAP you do any accounting entry posting, you need to know their impact. Okay, you need to know their impact. Business transaction will happen, and you will pass the journal entry. And in SAP, remaining all this, okay, you will get. So this user will enter. Okay, this in SAP user will enter. Sorry, this is the transaction. So transaction will happen. Business will do the transaction. The example is rent payment, material purchase, asset purchase. All these are business transaction. Okay. Now for this business transaction, user will post the journal entry in SAP. Okay. Enter journal entry in SAP. Okay. Now while entering in the journal entry in SAP, sometime you have to enter manually. Sometime it may happen automatic also. Okay. Automatic also journal entry happen. Automatic in a sense, let's say, sorry, yeah, today my throat is not good. Let's say you are purchasing something from the Amazon website. If you purchase in the Amazon, journal entry will automatically get posted in the SAP. Okay. If you purchase in any third party, let's say you are booking the flight in the Book My Show, but if I have interface Book My Show with my SAP, it will automatically journal entry will flow in SAP. Okay. So journal entry in SAP, it may happen manually. Manually means you have to go in SAP and you have to put debit and credit manually. Sometime it may be automatic also. But however way it is, ultimately you have to post the journal entry. If you post the journal entry, ledger will automatically get prepared by the SAP. Okay, so it is automatic. SAP will automatically prepare the ledger. This is also automatic. Okay, profit and loss account. This you have to customize. How you want to see the profit and loss account, that you can customize. Let's say first I want to show my revenue. In my revenue, first I want to show the sales revenue. Then I want to show the commission revenue. Then I want to show the any late payment revenue. So step by step, you can design your own P&L statement. Okay. So this is the customization. You have to do the customization. Okay, and balance sheet is also customization. You can do the customization in balance sheet also. Let's say first you want to see asset. In asset you want to see the current asset and fixed asset. In current asset again you want to do the further bifurcation. In fixed asset you want to do the further bifurcation. So however way you want to see your balance sheet and how you want to see your P&L statement, these two you have to customize. Based on that, SAP will give the output. Okay. Based on that, SAP will give the output. Let's say my requirement is that, let's say profit, or let me write shortcut P&L statement. Okay, P&L statement. In P&L statement, let's say under the revenues, I did bifurcation like this. I want to know the operating profit and I want to know the non-operating profit. Okay, let me put in this way. Operating revenue and non-operating revenue. Okay, so I can design my own. If I want to bifurcate my revenue as operating revenue and non-operating revenue, then I have to put all those accounts which are part of the operating revenue. Let's say operating revenue, I'm further bifurcating like sales revenue. Okay, sales revenue is my part of operating revenue. Now in that sales revenue, I'm again bifurcating how much sales I'm getting in the domestic market, how much sales I'm getting via export. So I can further bifurcate. Let's say domestic revenue and export revenue. Okay. Then let's say intercompany revenue. Sometime one company may be selling to another company also. Okay. Imagine let's say Apple India is selling to Apple USA or Apple China. So that is known as a intercompany revenue. So however way you want to see your profit or loss statement, this you can customize here. That is what I'm trying to tell here. Okay, you can customize here. So based on your customization, your P&L statement will give you the output. If you don't want to further bifurcation like this, you want only one heading that is called revenue, then all the value you'll get in the revenue. But you want bifurcation, then it will give bifurcation. It will give what is your operating revenue. In operating revenue, if further want to know what is your sales revenue, it will show. In sales revenue, if you further want to know what is my domestic revenue, export revenue, intercompany revenue, it is possible to know. So it depends on your customization. Is it clear, both of you? Is it clear? Hello? Is it clear, Pallav? Sir, respond,
Clear, sir.
otherwise
Clear, sir.
I don't.
Yes,
Yeah.
sir.
So is it clear, right? You got it now, what I'm
Yes, sir.
trying to tell? So
Yes.
this is your customization. So you have to know, you have to talk with the business. Whenever you are designing their profit and loss statement, you have to talk with them. Okay. And when you're whenever you're designing their balance sheet, you have to talk with them how they want their balance sheet. If they say that, and I want to, I need under balance sheet asset and liabilities. Under asset I need current asset and fixed asset. Under current asset I need inventory, account receivable, uh, prepaid expenses, advances. So why, how they want the bifurcation? So everything you can discuss with the business and you can customize. So accordingly you'll be able to see the result. Okay. So this is the accounting cycle you must know. I hope you are clear, right?
Yes.
Is it clear?
Clear, sir.
Now let us see today some. Let us do the some transaction and we'll prepare that journal entry. We'll prepare the ledger. We'll prepare the trial balance. We'll prepare the profit and loss account. We'll prepare the balance sheet. Okay. Then same
Okay.
thing we'll customize in SAP and we'll see how SAP is giving us the result. Okay. So So first of all, transaction will happen date wise. So let's say I'm writing here. So what is 20, this is March month. Let's say on first of 2024, first of March 2024. So in the beginning of your business, on the day first of your business, whenever you incorporate any business, firstly you have to put the capital into the business to start the business. Okay, so first transaction will be business started. Okay, our business commenced. So whenever you will start the business, either will start with cash. You can you can you can in you can you can give your cash into the business, or it's not necessarily that all the time you have to invest the cash. Sometime you can use your laptop also into the business. Okay, so that is also your capital. Sometime you can give your building also. Okay, you are using the you have given your building also for the business purpose, so that is also your capital only. Okay, so these are the three things you are investing in your business when you are starting the business. Okay, so this is your first transaction. And second transaction, let's say this is on 5th of March 2025, sorry 24. Okay, you let's say purchase additional thing you started purchasing. Let's say you are not having the furniture in the office, so you purchase furniture on cash. Okay, let's say worth of rupees 30,000. Then let's say you, so you have got the 1 lakh rupees. So in out of this, some money you have deposited into the bank. Okay, so let's say, so I'm not going to put more transaction. Let's say on 28th 03 2024, cash deposited in bank. Let's say 10,000 you deposited cash in bank. Okay, so let's say these are the transaction happen in the month of your business started. Okay, so these are known as a business transaction. So once business transaction happen, next is making the journal entry. So you have to prepare the journal entry. So journal entries are prepared like this. So format is date, particular, okay, debit, very basic format and credit. Okay, so this is the format. Let's say journal entries. Okay, let us pass the journal entry. Okay, so this is the journal entry. So first you have to write the date. This is the date. Okay, on this date, whatever is happening that you have to write. So in this, what is happening? You have started the business with cash, laptop, building. Okay, so this came into business. Okay, so this should be debit, cash account debit, cash account debit, your laptop account debit, your building account debit. Okay, then you whenever owner invested the money or building furniture anything into the business, that is known as a capital. Okay, so anything invested by the owner is known as a capital. So to capital account credit, so write the amount here. See, this is the amount. Cash is how much? Cash is this much, laptop 50,000 and building this much, like this. Altogether is capital. So how much capital is invested by the owner? It is 3,50,000 rupees. Okay. So this become credit. Any doubt up to here, Pallav? Any doubt,
No, sir.
Pallav here? Then you
No,
have
sir.
to write
No,
here
sir.
being. In bracket, I think you used
Yes.
to write, right? In bracket,
Yes, sir.
being. Being, you have to write the
Narration.
narration. Yeah.
Narration
Business started, right?
started the.
Something.
Yes, sir.
Correct, right? Something like that, correct? So this is
Yes.
known as journal entry. Then again on this date, another journal entry. Furniture purchase. When you purchase the furniture, furniture account debit to cash account credit.
Yes,
Furniture
sir.
account debit to cash account credit. Okay. How much worth of rupees? 30,000. Worth of rupees 30,000. Okay. Then again narration bracket being furniture purchased. Furniture purchased. Okay. Like this. Then third transaction is this one. What is the third transaction? That is cash deposited in bank 10,000 rupees. So when you deposit the cash, bank got the money. So bank account debit and cash went out. So cash account credit. Okay. You write here being cash deposited in bank. Okay. How much? 10,000 rupees. 10,000 debit and 10,000 credit. So this is known as a journal entry preparation. Okay. Is it clear? Is
Yes,
you
sir.
have to know as a successful SAP FICO consultant, you must know how to enter the journal entry. Or if you are not entering the journal entry, if system is automatically generating the journal entry, then you have to know how to analyze it, or you have to know how this journal entry is coming. Either the journal entry which system or SAP is automatically posting is right or wrong. So you should have the journal entry knowledge, because if you give the journal entry or if you enter the journal entry wrong in the system, then remaining all other reports will go wrong. Remaining your ledger will become wrong, your trial balance will go wrong, your P&L statement will go wrong, your balance sheet will go wrong. So source of all other report is your journal entry. So make sure that you are knowing debit and credit and you are posting the right journal entry in the system. Okay.
Yes, sir.
Okay, na? So is it clear?
Yes, sir. Clear,
Journal
sir.
entry.
Clear, sir.
Now let us prepare
Yes,
the
sir.
ledger. Okay. So ledger you have to prepare for each account wise you have to prepare the ledger. Each account
Ledger.
wise you have to prepare the ledger. So per cash account you have to prepare the ledger. For laptop account you have to prepare the ledger. For building account you have to prepare the ledger. For capital account you have to prepare the ledger. For furniture account you have to prepare the ledger. For every account you have to prepare the ledger. So how to prepare? Let's say first I'm going to prepare for cash account. So cash account. Format is same. Date, amount. Okay. Date, no. Particular date, particular amount. Okay. So from here to here it is known as a debit. So this section is for debit and this section is for credit. Okay. Correct,
Yes,
na
sir.
Pallam?
Correct, sir.
Correct me. After a long time I may also forget. Okay. So this part is debit and this part is credit. Okay.
Credit.
Now in this cash account, whichever transaction happen in the debit side, that you have to put in the debit. Whichever transaction happen in the credit side, you have to put in the credit. Let me show you how here. Okay. See here. So cash account. So it is in debit. Okay. So first of all, you have to come in the debit. First of all, give the date. So on this date, you have the cash account in the debit. So first give the date here. Give date here. Okay. Then it is in debit side. Cash account is debit side. So come into the debit side.
Debit
Then
side.
you have to give the opposite one. Okay. You have to give the, if it is debit,
Credit
then
side
what is
name.
the credit one? So you have to come here. So you have to write here. This side, if you are writing, you have to write 2. Okay. And this side, if you are writing, you have to write by. So 2 capital. Okay. That is the meaning. It means that cash account is in debit, but what is the opposite transaction, that is capital. So via the capital cash account become debit, that is the meaning. So you have to put the capital, but you have to put this amount. Okay, 1 lakh. So put here 1 lakh rupees. Similarly, come in the next transaction. So your next transaction cash is in the credit side. First check, take the date. Okay, take the date, put here. Let me remove one line item. Okay, so come to here. Now here cash is in credit. So come to credit side here. Here in credit side you have to write the buy. Okay. Then if cash is in credit, you have to take the debit. So in debit it is furniture. Furniture. Okay. And you have to put the amount of cash, that is 30,000 rupees. Okay. Like this. Similarly, come and check here. Cash is again here credit. Give the date here. Cash is credit, in the debit it is buy bank. So put here buy bank account. Okay, you can put account also, that is 10,000. So this is the total transaction of the cash account. So you have to now finalize, either in debit it is more or in credit it is more. Okay, so in the debit side you have 1 lakh rupees and in credit you have 40,000 rupees. So you have to put the balance here. So you have to put here by balance carry forward, right? What is
Yes, sir.
that, Pallam? Is it correct?
Carry. Correct, sir.
If you are adding this side, then two balance carry forward.
Yes.
I also forgot. Huh? So add here. This is 1 lakh rupees. Let me remove this. Okay. So this is total. Total this much. Then this side also total. So here 1 lakh rupees is there. Here 40,000 is there. So balance carry forward here. It will become 60,000 rupees.
60,000.
Okay.
Yes.
Then it become
Yes.
1 lakh total. Right. Now this 60,000 will go in the trial balance. Okay.
Yes.
Okay. This 60,000 will go in the trial balance. It will go in the trial balance. Likewise, you have to prepare for all. Okay. You have to prepare similarly. Now I prepare for capital. You have to prepare ledger for the laptop also, building also, capital also. For everything you have to prepare. Okay. Let me prepare for next laptop also. Two I'll prepare. Then you'll understand. Okay. Fine, na, Pallam?
Yes, sir.
I'm going to prepare for laptop also. So we have laptop on this. It is in debit side. How much?
Yes, sir.
50,000. So come here in the debit side and put the opposite, that is capital. So put here 50,000 rupees. And all these are not there. Okay. Remove this. All this transaction is not there. Right. After that, anywhere laptop is there? No, right?
No,
On
sir.
this date only laptop. Here no laptop. No laptop. So come here. So here also you have to put the balance carry forward, that is 50,000 rupees. Okay. And here also 50,000. And here also 50,000. Okay, like this. Now this, oh sorry, I was not supposed to change in the cash account. Okay, here it is there. This is the, just a minute. So this is the laptop account. So laptop account here 50,000 rupees, and balance carry forward will become, let me delete this one. Here 50,000, here also 50,000, here also 50,000. Correct, Pallam? Correct, na?
Yes, sir.
Now let us prepare the trial balance. Trial balance. When you are preparing the trial balance, format is particular, debit and credit. Okay. So now, okay. So come here. So for cash account, you have buy balance carry forward. If you are putting the buy balance carry forward into credit side, then it will go in the debit side of the trial balance. Okay. Okay.
Yes, sir.
If you are
Yes.
putting the two balance carry forward into credit side, sorry, debit side, then it will go in the credit side
Credits.
of the trial balance. Opposite
Salary.
way it goes. Okay. So
Yes,
cash
sir.
account, come here, put here cash account, cash account. Okay. Put here in the debit side how much? That is 60,000 rupees. This 60,000. Put here 60,000. Okay. Next is laptop account. Okay. It has also credit. If it is in the ledger, if it is in credit, the trial balance it will go debit. So put here 50,000. Likewise, you have to prepare the ledger for all the account. For all the account, you have to prepare and you have to put the balance into the trial balance. At last, your debit and credit should match up the trial balance. Is it clear, Pallav?
Yes, sir.
So no doubt.
No doubt, sir.
So account you are understanding na slowly, slowly.
Yes.
So please, I want you to practice till trial balance preparation. Okay, I don't want any confusion in the trial balance. So please take some transaction and prepare the journal entry, prepare the ledger, and prepare the trial balance. So this is the practice for today for you. Is it clear?
Yes. Clear, sir.
Okay, thank you. Thank you so much then, guys. Huh? Thank you. Thanks a lot. Yeah, bye
Okay,
bye.
sir. Thank you, sir.